Good morning out there, traders. It's February 22nd, 2024, and welcome to the Apteros Daily Market Insight. Let's dive into our recap, and then we'll talk about our levels and plan for today. So, take a look at yesterday. It was kind of a big day fundamentally. We had FOMC, we had some big earnings that were coming through. So, that's kind of why you see such an expansion here coming into the overnight and the close from yesterday. But the situation wasn't clear for us either in terms of context. We had dissonance between a higher time frame idea and another higher time frame idea, and they were kind of pushing back and forth up against one another. So it wasn't the most clear situation to be involved in. But overall, we end up nailing what's happening with the context here to the bullish side of things and really getting a chance to kind of participate to the upside. So let's just talk about opportunities and so forth along with what was happening, right? So in the DMI yesterday, I'd mentioned that really as we were looking at the situation overall, we were in a bullish zone and we had to trade the what is picture. So all through the day, pretty much up through here, was all scenario one, and you were being bullish from these areas of the lows. Now with FOMC, this type of price action is not uncommon, right? There was just no release, no real urgency, let's say, to get this market into new prices. So it was just a continual kind of accumulation phase of what was going on before FOMC. So no real release, right? So scenario one was on the table all throughout that with shortened targets and so forth. Then we start to see kind of an interesting picture here from this area down to here. We accept into scenario two. So from here to here, we're in scenario two, and we're looking for a chance to get shorts after kind of FOMC takes place and things are kind of moving to the downside. It looks like, ES has a really good opportunity to get short, and kind of heading into the close, we don't get any opportunity to act on scenario two. So there were opportunities with scenario one to continue to, stay long, stay long, stay long, all the way through this green zone here. And then, of course, scenario two comes along, switches everything, and we say, okay, now we're looking for a short on a pullback. And the pullback gives us no turns, no inflections whatsoever. So no opportunities for scenario two. And we go right back into scenario one heading into the close. And we get a clear cut acceptance picture, opportunity here. And that was just kind of the end of the day, the end of the session, right? And then, of course, the overnight just kind of continuing and blasting through to target areas and so forth. So not exactly the most straightforward situation for the DMI because of the FOMC, the volatility, and the way in which the acceptance picture kind of played out. The good thing about what was going on yesterday is that our bias overall with scenario one and the understanding of where we were sitting contextually from the narrative perspective was, spot on. And we knew kind of what our plan of operation was in an unclear situation on the ES. And, caution advised, obviously, whenever we're always in dissonance and things like that. And I think that, that was prudent, and this is how it played out. Now taking a look at what's going on today, it's not as straightforward as you might think in terms of what we have going on. Yes, we see bullish areas here. We are generally bullish across the board with the acceptance picture of the what is. We have neutral references out here that make a lot of sense to pay attention to. But one of the big problems with today in the ES is that we're out in open space. We've left a lot of things behind, and we're now just kind of pressing this market higher. And the higher we go, the more energy we're going to need to continue that bias. So what we have going on in terms of scenarios is this is our main line in the sand overall, right? For the bullishness, this is the first area that the market would test and come under pressure if that failed, right? So with that, we have scenario one, which is continuing to hold up above this line in the sand area. Scenario two, a good opportunity to the short side if it does shift over. So we're more than happy to be involved in either direction from this upper line in the sand for sure, because of the way in which this market could evolve. But like I said, out here, the idea is, if we press into neutral references and continue higher, once we get out to this overall destination, this is kind of the end of the line for what we're looking for in scenario one today. That's kind of where we're at. And how it plays out from where we are currently in price, if we push straight up, it's going to require more and more and more energy to continue just to ride up without any type of pullback. If we start getting that pullback in, well, that's actually kind of nice information for us from an auction perspective. That tells us that there's a healthy acceptance of what's going on up here. Bears are kind of, looking to participate, and then we'll get a chance to see where bulls are willing to get involved in this market and how strong they really are. So, caution is advised where we're currently sitting in price. If this market does just continue to press up, once we get out to this overall neutral area, the market's going to require more and more and more energy to continue to press today. So if you have a way to kind of measure that with your intraday framework, looking at order flow or something for a bullish environment, that would be kind of my advice to somebody who's looking at this market from where we're currently sitting in the context. From there, if we start to see pullbacks, well then we get back into neutral references and we start paying attention to how we inflect off of those, along with scenario 1 back into this main line in the sand here. And then, of course, scenario 2, if this line in the sand fails, we get a chance to kind of go down into the overall idea, the overall area. This is kind of the higher time frame idea that is now working itself out to the bullish side of things, and that's what we're paying attention to. Now, this market is not completely free of dissonance. Like I said, there are factors that if you're a NADRO student, you completely understand, because I do a student-only DMI as well that explains a lot of these factors. And I've gone over those briefly in this DMI as well. Being out in open space, no real auction to the pullback side of things, definitely something to pay attention to for today. So caution is advised, even though we have kind of a clear picture to the upside. Pay attention to intraday frameworks and so forth. If this is a situation that you just don't have a process for, if you don't have a clear way of operating in this, my advice is honestly just to watch and learn from today and pay attention to how this market plays out. But the overall situation that we find ourselves in contextually, yes, the what is picture is bullish. As we go higher, we need more energy to continue that run, and we'll be monitoring that with a more dynamic reference from a lower area here from this line in the sand. All right, so trade well out there, mind your risk reward, and hopefully this is insightful and helpful for you. And the best thing you can do today is mind your process. And if you don't have a clear process answer for action, that's a clear indication to do nothing.